Yeah, the market was flat today with the negative bias. Like you said, it closed negative by 0.07%. And in terms of value traded, we also saw huge declines in value and volumes traded when we compare. If you compare it to yesterday, value and volumes declined by 40%. But in terms of the drivers of values, there was a huge demand for Zenith Bank. There was also a huge demand for FlourMills as well, and I think it's not surprising why there was such a huge demand for FlourMills, because it released results 2 days ago, and the results showed huge performance in earnings. There was a significant increase in its earnings, and dividend paid out also, dividend per share also improved significantly compared to the previous year, and I think that's why investors there's still a high demand for the stock. And in terms of performance, in terms of participation, we actually saw about 65%, that's from our brokers anyway, we saw about 65% participation from foreign investors, while local investor participation was about 35%. Okay. And it was really the portfolio managers, the pension funds, that were really driving that from the local end. But I think overall there's still that cautious reaction by investors, and everyone is still quite cautious and picking stocks at very conservative prices.
Obviously, people will be cautious, Muyiwa, because the banking index is the largest for the NSE, and everybody's really anxious to find out how banks have performed in terms of the results we'll be seeing for Q2, and people awaiting clarity on the asset management company to be launched by the CBN. What's the outlook for the banks?
Yeah, Lerato, we actually do have a better outlook for the banks for Q2, because we expect loans and advances to have grown in Q2 when we compare to Q1, because banks were very cautious in Q1. But right now they are a bit more, even though they are targeting quality assets, but at the same time they've loosened their criteria a bit, and they are not as cautious as they were, and right now they are focusing on increasing interest income. So we actually do expect better performance for the banks for Q2, and I think UBA that released its results 2 days ago also showed that results will be better for Q2 when you compare with Q1. UBA's performance, for example, increased significantly if we compare it to Q1. And we expect that trend to continue. Its loans and advances grew by 15%, and we expect it to be at that range for the banks that passed the CBN audit. We might still expect moderate growth for banks that the CBN intervened in, but even publications from the CBN show that loans and advances also grew from their end as well.
All right, now, just in terms of value added for the investor, there's been a debate raging within the markets as to whether people should be putting their money into Tier 1 banks, which are very safe, or Tier 2 banks, smaller, or look at the cheap assets being presented by the rescued banks, especially once the AMC is up and running. What's your assessment?
I think in my assessment, I would look at it, I won't really just pick out Tier 2 or Tier 1 banks, because if you look at the banking industry, that's even looking at the banks that passed the CBN audit, most of them still are trading at significant discounts, and even though there are few banks that we feel have higher upside potential than some, and in the Tier 1 banks, for example, we believe GT Bank and First Bank still have higher upside potential than their counterparts, that's Zenith Bank and UBA, while in the Tier 2 banks, we still expect a bank like Access Bank and Sky Bank to still have, they are trading at significant discounts, and we see that we expect their prices we expect that they will trade higher by 12 months time, because our upside potential for those two banks are much higher than 50%. And so really I won't just pick out Tier 1 or Tier 2 banks, but I would have a basket of both Tier 1 and Tier 2 banks, because we expect that both sectors will still trade significantly higher because of the discount that they are both trading on at this time.
All right, and Muyiwa, finally, just your opinions on the proposal to launch a sovereign wealth fund for Nigeria. Yes, the modalities haven't been ironed out. There's still a bit of disagreement as to what it should look like, when it should be set up, a timetable, how it should be sourcing funding. And the government, the federal government, the various governors sitting on the Economic Committee, the CBN governor working out the general details. But Nigeria moving into sovereign wealth fund terrain, is that a good or a bad sign?
In my view, I think it's a good sign because obviously I think it's better if we save for the rainy day, and it's actually been in the pipelines for a while. This government was talking about it in 2007, but they went silent after a while, and I think it's good that it's been brought up now. But I think the fact still remains that at this current time, we really don't have so much oil savings per se. All prices have declined significantly, so in my own view, is where we really get those savings from. I think that's what my question is. But in terms of modalities, I know that would come to play much later on. But I think my own question really is where we'd get that savings from right now until we start seeing oil prices trend higher again.
All right, let's throw that question out to the universe.